banks have charged too much money to be the middleman, as have many other institutions. But Wall Street in particular has made a lot of its money off of fees, and particularly fees from real people relative to fees from corporations, where it also makes money. And to the extent that you have DeFi getting involved, not just in the individual real human relationships or people relationships to the banks, and then you move it to corporates and so forth, we will see a bit of a breaking in the armor around Wall Street and around the big banks.
Thanks for joining us for part 2 of our interview with former Wall Street insider Nomi Prins. If you haven't yet watched part 1 of our discussion with Nomi, in which she quantifies just how large and dangerous the distortion the Federal Reserve has caused in our financial markets are, head over to our channel at youtube.com/Wealthion and watch it there first. It sets the context for the investment perspective that Nomi and I discuss in this video. And please take just a moment to support this channel by first liking this video and then clicking the red subscribe button below. Doing so will help this video reach a lot more viewers. All right, well, let's get started watching part 2 of our interview with Nomi Prins. Let's talk just for a moment about some of these, new technologies, DeFi, etc. In layman's terms, this is sort of the crypto space in many ways. It provides, well, I'll let Nomi explain it better than I, but the technology here does have the promise of being able to take out a lot of the banks as middlemen, and to handle the same types of transactions that go on in the financial industry every day, cheaply, more effectively, more securely, etc. So there is potential here for these guys to sort of launch a better mousetrap and steal a lot of what Wall Street's making its spoils over. If you can just talk about how credible that threat is, and then, I can't imagine the banks are going to give up their advantage lightly. So, how is the empire going to try to strike back in the story?
Yeah, that all of those are excellent points, because the evolution is there, right? Banks have charged too much money to be the middleman, as have many other institutions. But Wall Street in particular has made a lot of its money off of fees, and particularly fees from real people relative to fees from corporations, where it also makes money. And to the extent that you have DeFi getting involved, not just in the individual real human relationships or people relationships to the banks, and then you move it to corporates and so forth, we will see a bit of a breaking in the armor around Wall Street and around the big banks. Now they are fighting back already by getting invested in these companies. So to an extent, they're trying to hedge their at least the money they can make out of the situation, whereby if they're taken out of the middle, they become not the middleman, they become the investor in the thing that's taking them out. So they are able to play both sides.
The buggy whip manufacturers are becoming the investors of the automotive companies tomorrow.
Right, exactly. So you talk about how fast any of this can roll out. Yeah, you look at the fact that Apple is every company is developing, but just Apple just announced, for example, that you're going to be able to do sort of a tap type of money transfer just with the phone. So you don't have to have an app, you don't have to have a Square, you can just basically go straight from hardware to software to money to bank. And that's just that physical relationship of being away from a bank and actually moving money in a different way. That doesn't necessarily get into the crypto side. The crypto side of it, the blockchain side of it, the idea of those types of transactions being secure, which is something that blockchain technology and development is going to continue to enable, is going to take away from Wall Street's sort of main arbiter of supposedly authenticness in terms of payment transfers. And so once that really becomes more and more mainstream, that's going to trend out. One of the things that I think is going to be an exciting area in terms of mainstream, and what we see as this evolution of from Wall Street to crypto and blockchain to more average businesses and small businesses will be and are being developed payment systems that allow small commerce and small merchants to actually transact if they choose to in dollars, or if they choose to in Bitcoin, but the mechanism whereby they can run their businesses either way, and not pay fees as a small business, which are very high to banks, but to effectively reduce them, but also have the ability to run their businesses and account for them and everything else. That's going to create another spin away from Wall Street. Now, all of this is going to take a while because, I mean, just if we look at the technology and how it's developed in something, for example, like even ATM machines. You know, there was a time where nobody wanted to use them because nobody trusted the idea of, it was fine to get your money out of a machine, but depositing money into it, you're depositing your check, you know, it took a minute for that evolution to happen. And now we're not even using ATMs that much anymore. We're using our phone to snap shots and go into our bank accounts. And so all of that technology becomes tighter and tighter and tighter, and that moves from Wall Street to the fintech side. And we've seen that. We're going to continue to see that. And to the extent that therefore money evolves from dollars or even digital dollars and other currencies into the crypto space, again, that evolution is going to take a long time, and it's going to require that on the ground small business buy-in, which doesn't exist yet because a lot of the technology is just being developed to even enable it to exist. How long can that take? I think you'll have the technology in a couple of years to maybe 5 when you get a decent percentage, not like everyone, of small businesses that are already technologically advanced adopt outside of major banks. But we're in it. I mean, the real exciting thing is that we're actually in it. Yes, banks will fight back. Yes, they'll invest in the technologies that are taking business away from them. But also these technologies and in the cryptocurrency world, of which most currencies will be worthless, but some will survive in this sort of transformation. I think we're just literally in the first inning of this. I mean, as much as there's been already evolution and buzz and growth, it's really small compared to what can actually happen.
Wow. All right. Great answer. And Nomi, I think this is an entirely, separate interview that we should do at some point, just really digging into the promise of DeFi just in the financial space itself. And you clearly seem to be very knowledgeable about it. So it sounds like we should largely be cheering this transition for 2 reasons. One, it sounds like it does actually make things better for the end user at the end of the day, and it takes some of the death grip that Wall Street has right now over the financial system out of it. Now, Wall Street's doing its best, as you said, to kind of be the owners of the winners here, but at least it sounds like they may not be 100% successful at it, and anything that reduces their cartel-like grip will be good. And for folks that haven't seen it, I did delve into, or at least begin to scratch the surface about how to invest in these types of companies that are providing the platforms and the solutions that Nomi just mentioned here in my recent interview with Stephen McBride, which I'll link to up here. If you haven't watched it yet, go watch it. It's a really good overview, and definitely go to wealthion.com/crypto to download Stephen's 40-page report that really does a good job of just sort of helping demystify this space. If you didn't understand all the terms that Nomi was just using, that guide's a really good way to sort of start bringing you up to speed. All right, Nomi, I'd love to continue diving into this, but I don't have, sadly, enough time given the other questions I have for you, because I want to now pivot a little bit and try to make this real for the investors that watch these videos here on Wealthion. What they're trying to get a sense for is okay, if the puck is heading where Nomi is saying it's going, what should I be thinking about doing to either, protect my wealth against, some of the risks of this spinning out of the Fed's control here, or, making sure that I'm not, becoming roadkill, whether it's to inflation, if the Fed goes back to easing or whatever. So, you sort of talked about, I'm going to put words in your mouth, feel free to correct them, but you talked about how the Fed's going to do a little bit of tightening, but it's probably not going to get that serious. The markets may get more and more cranky as the Fed is doing those initial tightenings. But then you think the Fed's basically going to reverse, and it'll be kind of game on again for the markets, at least for some period of time. Are there particular assets that you think will fare well or poorly in the first part or the second part of that?
I think in general, what is important to look at from an investment standpoint are companies and names and sort of trends that work in both cases, that work if inflation is rising, or if inflation on the top line actually gets lower, but certain areas rise, whether that is infrastructure spending and the amount of money that can come from Wall Street, the financial community investments into that space, the materials that get used in infrastructure, as well as, take that out, a trend into the sustainable energy or EV space. So then you're looking at things like copper, you're looking at things like silver, which have inflation hedge value, they have use value. Silver in particular is underperformed recently. Copper had, a mighty year last year, dipped back down. I think it's going to go back up because there's going to be use value as we actually spend some money in the growth of real things. And the other area is technology, because technology is going to not just what we've been talking about from a stance of financial technology, but technologies that enable growth to happen. So engineering technology. So instead of just building that road and looking at the materials and the construction, say payments and investors getting involved in those companies, because there's some government coming in, there's some private contracting coming in, there's investments coming in. What's the engineering technology that's going to make that more efficient across more bridges? So those are the types of areas where you can invest and also ride out inflation bumps, because it's a bit of a over the highway view. Obviously, highways need a lot of money. Besides the point, but that's the idea, is to look at a blended use value of trends that are going to happen, materials that are required, and the money that's going to go there, as long as money is cheap, which it will be.
Which it will be. Okay, and so. All right, let me ask, before I get to money is cheap, can you just give an example of an engineering tech company, just for folks that aren't super familiar with that space? Doesn't necessarily need to be a company you like, but just an example of companies in that space.
Well, it's companies in those spaces like Road or something, which is a small cap company, but they're involved in construction, they're involved in the engineering of construction, and they have technologies that make that engineering sort of happen more quickly. For example, so there's companies that, again, in sort of have within them multiple components of these areas. And then, of course, there's bigger companies from there. There's mining companies, actually, without getting specific, but the ones that actually use a combination of physical trucks, engineering, and so forth. So it's really looking at any company that has as its mission the idea of using technology and growing in that area.
Okay, and you probably said this, but maybe just to say it a little bit differently, you said infrastructure companies, obviously the commodity producers, et cetera, but those are all companies that are going to benefit from any any stimulus related to the infrastructure bill that's already been passed. And if we ever get any new bills through Congress for infrastructure, right, they're also going to be beneficiaries of that too, right? So there's both the existing trends that are on the ground, but as potential new stimulus gets passed, it's probably going to be directed in those industries as well, correct?
That's right. And even if it's inefficiently directed, the fact that it is potentially available actually, and it's in a trend area, yes, will help to drive other types of money into those areas. And so that's the main thing. And I think, however we consider infrastructure, what's communications technology, infrastructure is also 5G network. It's basically anything that enables us to have more sustainable physical assets, or just in general sort of grow with the trends, grow with progress, grow with everything else. And there's an element in all of that of technology. So the companies that actually get that and can harness that are the ones that are going to do well, because of two reasons. One, because they're in the trend, yes, and two, because they're floating on the general sort of cushion of the money that's available. And then the third factor is, if there is government spending, or even the idea that there can be government spending in those areas, it's going to just enhance the growth for the firms that can do that.
Great. And I'd add a fourth for the producers, which is, in an inflationary world where you're getting still continued a lot of, money printing to fund all this stuff. Yeah. If you're business is taking a hard asset out of the ground, you'll always be able to pass that cost along to your end customer. And so now I want to get back to your cheap money comment, which is sounds like you see sort of a future of cheap money ahead, and we've had a long trajectory of it leading up to now. Do you see gold performing? How do you see gold performing in that world? You would think it would perform quite well. It's done okay, but not nearly as well as people thought it would, given how much money has been invented, from thin air over the past 2 years. So what are your thoughts on gold?
So I think of gold or one of the only alternative assets, not that it is an alternative asset, but asset alternative, let's say, to cheap money. It would have been doing far better in terms of rising in value than it has done. I mean, the fact is that money has a lot of choices. I.e. cheap money has a lot of choices. So even though it's there, the more choices it has, the less it will go to that sort of traditional, the inflation hedgy traditional reason, as well as obviously wealth protection that the gold has offered. But I think if you look at it in terms of the trend as well in gold, is that gold still does have a retention of value. It does over the long haul rise in wealth. It does tend to not go down very much in terms of it is a protection when there is a lot of volatility in general in the economy, not necessarily just the markets. And so I do think it needs to continue to be a percentage of anybody's investment portfolio for the long term. I also happen to think that other precious metals might have more immediate use value. As I mentioned, copper and silver and other sort of metals in that, which might have more appreciation because of that than gold might have. But I think you need to have that in a portfolio, and it just hasn't gone up as much, honestly, because it's just not been the only choice. And I also think the crypto currency world and Bitcoin has taken a little bit of a bite out of what it might have just been the gold investments over time. And so as a result, again, money has choices. Investment trends have choices, and we've just had more. And so I think that's one of the reasons there's been a dampening, even though, or at least not as much an appreciation, even though money is so cheap, and it should be an obvious alternative to a fiat currency that can kind of be printed forever and without a limit. And I also think, though, just separate from that, not that you specifically asked, but just because I mentioned it, the idea of being in crypto and gold, and to diversify in that way is really the best thing to do for a long-term or medium-term growth portfolio.
All right, great. I hate to squeeze this question in, given that I'm so short on time, but I know folks are going to ask me to ask it. So you mentioned that other precious metals may have a better future return profile right now than gold, given both the commercial demand that might come from them in the future. So I got to ask about silver, because silver, again, has done okay, but it tends to follow gold. How undervalued, if at all, do you feel silver is right now?
I think it's quite undervalued. I like silver. I like your question with gold have been have watched the sort of treading waterness of silver just sort of recently, and I think there is a tremendous upside. The last time silver was at relatively high historical levels was in 2011, when there was a debt crisis, and there was no growth. And it was just sort of a point in time, and from which we've seen a kind of decline in silver. But I do think that as these other trends increase, and the need for silver and the availability that we have versus what we may need going forward is going to basically come back and give silver more of a bid. And I've held silver for years. I will continue to do that, and I think at these levels, whether it's through pure silver or in some other way, I think actually buying into these levels is a smart thing to do. Again, for medium or long term view, and I would suggest continuing to do that.
All right, great. All right, so I know that you have been hard at work on a new book. I believe you may have even handed off the manuscript at this point, and if that's true, congratulations.
Thank you.
Can you give our viewers just a quick preview of its theme and what's in it, and then when let them know when it's coming out, and I'll make sure that if your schedule allows, we bring you back on when the book launches so that you can really tell everybody what's in it.
Yeah, absolutely. So it's called Permanent Distortion. It touches on some of the things we've been talking about, that the main theme of which is that because of this abundant creation of manufactured money throughout the world, we have an extra level that is now permanent, not temporary, of distortion between the levels of financial markets and the experience and the numbers of the real economy. And as a result of that, we've had a lot of things that have happened and will continue to happen. That is more unrest, that's more political turnover, that's more people trying to figure out how to get outside the system in terms of other modes of commerce and financial dealings and economic dealings, and that's going to grow. And so this idea that we're at a moment in time that's not going to revert back to some way it used to be, but that we are where we are. And there's manifestations of that, trends because of that, challenges because of that, risks because of that, upsides because of that. I really kind of look at the overall whole picture. It's supposed to come out in the fall. I don't have the exact date yet, but when I do, it will be on my website. And I would look forward to coming back and sharing sort of more detail with everyone who's here now.
Fantastic. Well, look, that whole arc of the book sounds like it's just in the strike zone of the interest set of the average Wealthion viewer. So can't wait to have you back on in the fall. In the interim, though, Nomi, for folks that have enjoyed this discussion and would like to learn more about you and your work, perhaps follow you, where should they go?
Best place really is my website, because anything I do or will do tends to live there, and it's www.nomiprins, NOMIPRINS, myself.com.
Great. And you're active on Twitter as well, right?
Active on Twitter, Insta, the whole thing, and all of that is both on the website as well as it's at Nomi Prins. My Instagram handle is at Real Nomi Prins, and yeah, basically that.
Excellent. All right. Well, look, we'll put up the URLs to those assets when we do the editing here, so folks know exactly where to go to follow you. Nomi, what a wonderful discussion. Thank you so much for giving us so much of your time. Really look forward to reading the book when it comes out and having you back on here in the fall.
Thank you so much, Adam. Take care.